Okay, so is it possible that a tax strategist could get you to $0 in tax paid? Is that even a possible thing? I will say it is absolutely possible. It may be possible for you, especially if you're a high earner. If you're somebody that's paying over $100,000 a year in taxes, there are all kinds of creative ways to do it. I was able to get my tax bill from paying just an effective rate of 25% taxes to about 1%. And I did it through some creative strategies to be able to pay less in taxes. So again, there's tax evasion, which involves going to jail if you do that, but there's tax avoidance, where you find different ways that the government incentivizes you to be able to pay less taxes. So let's jump in. We're going to go over 3 simple steps. I've got a great quote for you at the end. Let's jump in and let's go. All right, so my name is Bronson Hill. I'm the CEO of Bronson Equity. We're an investment group that helps people like you to get passive cash flow, appreciation, or tax benefits through investing in things like real estate or businesses. If you haven't joined our investment club, you can check it out below. We'd love to have you join. I am not a tax professional, so these are just my opinions. Get professional advice from a CPA, but I'm giving you just educational thoughts here. So really, what is a tax strategist, right? Isn't my CPA a tax strategist? What shouldn't they help me on strategy? Well, I have found, my experience, there's a big difference between traditional CPAs and tax strategists. Now, tax strategists typically are CPAs, or they have CPAs as a part of their group because they're providing tax advice, but they're typically, it's like 1% of CPAs or 2%, they offer some tax strategy involved with it, right? So a tax strategist, a CPA will just say, give me all your tax stuff. Tax strategist will say, well, let's look at everything that you're doing. Let's look at all the possible options here of reducing taxes, the government incentives that are out there, the ways you can reduce taxes, the ways you can invest in certain things that actually could reduce ordinary income or provide some tax shelters for you so that we can just reduce your overall tax bill, right? Which is amazing. And so I think that's really what it's about. Typically, this is a fee-based plan. Like I said, it usually costs money to set it up. Often, tax strategists will do a free intro call just to understand your situation. And then if you decide to work with them, there'll be a fee. But hopefully, you're getting paid back 10 to 1 or 20 to 1 as far as what you're paying them versus what you're getting. So I'm all about that. You can pay professionals, you pay a little bit to get a lot back later. So there are strategies you can use to get to zero taxes, right? Now, if you're a physician, you're somebody who's a professional, you might think like, how in the world? I'm paying like 50% in taxes. I've met people that are paying hundreds of thousands or millions of dollars in taxes each year. And you say, well, why have I not been doing this? How is this even possible? But there are strategies out there that people are using to be able to reduce taxes significantly. So if that's you and you're in that case, I strongly encourage you to pay attention and reach out to a tax strategist. So the first one is called REPS. It's REPS, which stands for Real Estate Professional Status. Now, this is a IRS designated, kind of like a designation that allows you, if you are a real estate professional, and there's some definitions of that. You've got to have 750 hours a year that you put in that. It's documented. It's 51% of your working time. So, we've had some people that are physicians that are working full time and their spouse can do it. So it doesn't have to be you, it can be also your spouse. Or they cut down to part-time, go to 20 hours, and they're doing 25 hours in real estate, right? And they document kind of how that works, or maybe they're workaholics like I was for a while, where you're doing 30 hours in one thing and you're doing 30 hours in real estate, and it allows you to have enough hours to make it work. You've got to be an owner of a business, and you've got to be that works in real estate and be actively involved. You can also be a real estate agent, and that actually qualifies as well if you have the hours and you're putting in the time and things like that. So really amazing. And then what that allows you to do, it allows you to take depreciation from investments, like we've invested in ATM machines and car washes and multifamily and other things, and you use all this front end, it's all front-loaded depreciation. So again, depreciation is not losses, it's paper losses, right? It's the losses on paper, and you can use that against ordinary income as a real estate professional. Now, typically, I talk about this in my book, Fire Yourself, where you've got the two buckets, right? You've got your ordinary income over here, and you've got your investment income here. Now, depreciation will allow you to use it in your investment income, but you can't use it against ordinary income unless you or your spouse are a real estate professional. Then you can use that depreciation over here. So that's where it gets really magical. So that's one way. Another way is through retirement accounts. You can max out retirement accounts. It's kind of a traditional way a lot of people suggest to do it. Another one called infinite banking, which involves basically using whole life insurance policies. It hasn't worked for, I've used a real estate professional status to be able to help, for me to kind of work around some of the taxes, but that's what a lot of people I know, they use that and it's very helpful for them. And then, just some real life examples. I want to give you a couple examples of how this has worked for people that I know. Like I mentioned, the first example I gave on this video, there's some medical brothers in California, own a couple medical practices, sold it for $5 million to a private equity group, and the tax bill was $2.4 million, and they were able to reduce their tax bill to $125,000. Now, it would have been basically zero, but they live in California, which California doesn't really recognize a real estate professional the same way. So they did it through, just real briefly, both of their wives are real estate professionals, so they're both as real estate agents and have the hours to show they've got it there. They invested in things. They put a lot of the money they would have paid in taxes into assets that depreciate 100% or in year one. So they're able to write all that off. And then, they were able to do something with a little bit for the California state tax. There's something called a conservation land trust, which is it's like a syndication, which is like a pooled investment, but there's no return. So you're just basically doing a conservation, and there was like a credit of 4.5 for one. So if they put a certain amount of money in there, 125K, it gave them like 4.5 times that amount of tax credits, not just deduction, but tax credits. Now, there's been some changes in conservation land trust where they've kind of limited some of that, but it's still available. It's just kind of been limited a little bit. So very, very interesting. But this is where somebody who's a tax strategist and somebody who's in this space will be able to help you. And they worked with somebody like that to really help them get where they need to go. So if you need a referral to Tax Strategist, we've got referral to Tax Strategist. You can send an email to admin@bronsonequity.com. Reach out to us. We'd love to get you in touch with a great tax strategist that can help you. Just love to help you get there, because again, I'm all about trying to reduce taxes. I don't think the government's the best, utilizes the money it gets the best way. Obviously, they're printing and spending and doing all this stuff, and I just think there's more efficient ways for people to spend and create wealth, outside of just paying taxes. So that's my opinion. But this is from an old politician named Jean-Baptiste Colbert, and he said, "The art of taxation consists in so plucking the goose as to obtain the largest amount of feathers with the least possible amount of hissing." I thought that's pretty funny, right? Just imagine you and I are the goose and they're trying to pluck feathers. You just want to, have the least amount of hissing. So I think that's a good way to look at it. And then one thing we're looking at in 2024 is we're looking at buying businesses. We're in the process of buying a business right now. I'll keep you posted on that. But check out this video. It talks about how to buy a business in 2024. And then if you haven't checked out my book, Fire Yourself, on the shelf here behind me, go to Amazon. You can check out the link below, and would love to. It's become an Amazon bestseller, thankfully. So thankful to all of you for supporting that. But again, please share this video if you know somebody who could benefit from it, who needs some tax strategy. And I look forward to seeing you on the next video.